as promised, Anne and Pamela Aden are with us, the sisters who are the co-editors and publishers of the Aden Forecast. Aden, A-D-E-N, forecast.com is their website. I should note, just to be completely transparent here, that Aden Forecast is an advertiser on our program, or an underwriter, or whatever the word is. You can tweet them, by the way, at the Aden Forecast, A-D-E-N Forecast. And Marianne, welcome.
Thank you very much. It's nice to talk to you again, Tom.
Thanks for being with us. And Pamela is there, too?
Yes, she is.
Okay. Hey to Pamela.
Hi, Tom. How are you?
I'm well. And there were a couple of stories in the Financial Times on Friday that I got, and I got your most recent investment newsletter, and in fact I mentioned on the air that you're kind of backing off we've been in bonds for quite some time, and but anyway, the two stories I saw, and I'd like you to comment on that too. But the two stories I saw, the first one was the gold demand rose to its highest level ever for the first quarter in 2016. And then in today's Financial Times, there's a piece about how gold just dropped and lost all its gains from the last however long the period was. I couldn't make the graph big enough that I could read the dates on the bottom, but apparently it just dropped a bunch. And I don't know why, and what's going on with oil and all this. And, where are we at in terms of an investment environment right now?
Thank you, Tom. This is Pam speaking.
Hi, Pam.
Yes, gold demand has been incredible. It's nothing like rising prices being the best quarter in 30 years. And so rising prices this year that overpowered the stock market, the bond market. It had an impressive rise, and a lot of it was safe haven buying, and a lot of hedge fund buying aside from normal country buying, which they continue to grow. And so there has been a lot of demand. Now, also, we think that the price, meanwhile, has risen much too far too fast. And so just that we see the decline that's now and probably going to go on for a while longer as a normal downward correction within this rise that we think is part of a major turnaround for 2016. And so we're looking forward to whenever there's deep, hopefully, not so deep, but deep downward corrections in gold, silver, even platinum. We're looking at a little bit closer now. And gold shares clearly have been way overbought. I mean, extremely so. But we think they're going to probably decline even more than gold in this downward correction. And we're looking for a good buying opportunity in a couple months, say the summertime, for some more buying.
Very interesting. And the state of oil around the world, is it just the instability in the Middle East right now that is? I notice oil has popped back up again. What are your thoughts on where that is going, and what does that mean for us? Why does when the price of oil goes down, the stock market gets hurt? You'd think it would, the stock market would go up. Oil powers everything, right?
Well, that's indeed correct. It has been the powerhouse for the stock market, clearly, since January, since this year, pretty much. Since it started rebounding, the stock market rebounded with it, and it's because the energy shares fell so much with the falling oil last year that they were way down. I mean, talk about a deflated market. They fell so far, so terribly, and way undervalued than they should be. So this bounced up the energy sector and therefore the stock market, which is a good component of the stock market. So it does make sense that it did influence the stock market at this point when the stock market was low and oil was low, for them to rebound together. To say they'll stay in two-step together from here on out is to be seen, but it certainly was from a bombed-out level to a normal level for the energy sector and the stock market. So we see oil, once any kind of fluff is over and looking over the couple months or so, we can see higher oil prices. That's what it looks like to us over the coming years. Right.
But functionally, higher oil prices are like a tax, are they not? I mean, it causes the price of gas to go up, which reduces the amount of disposable income people have, which is what economists refer to as aggregate demand, which is what drives the economy. So oil going up should be a bad thing for an economy, shouldn't it?
Exactly. That's what I think. So far, they have gone together. Excuse me, the stock market and oil. But there comes a point, and we think it's coming up pretty soon. If oil keeps going up, it's going to have an adverse effect on the economy and the stock market. Like you just said, it does. It's like a tax, and so we will see then finally the market react to that in a negative way at some point.
Very, very interesting. What are your thoughts on where people who have, where people should be invested right now? What are the things to think about and the things to avoid?
Yeah, it is a tricky market for 2016. And like we mentioned earlier, we think that this is a transition year, like a year of the 12 months, looking over a 12-month period. And we think that the stock market is not a good place to put your money in right this moment. We're looking for that. We'll see how any kind of correction takes us. But for now, we're being very cautious on the stock market in general, like industrials and that. We're looking to buy gold, silver, and gold shares on a correction that could be several months away, and sometime, like say, late summer or so. And then for bonds, we just got finished selling our bonds for the first time in 2 years, which we still think. See, that doesn't mean we think interest rates are going to go up fast from here. We think interest rates could stay sluggish to sideways to uppish. Like they could even go up another 1% or 2% on the long end, and still not really change the mega picture, which is still down for long-term interest rates. So we don't see that just because we're out of bonds means that we think they're going to turn into a roaring bear market. We just think that we're not going to get much upside left on bonds. Right.
So they've kind of they've run their course, or whatever the appropriate cliche would be, I guess.
Yes, that's what it looks like for now. But again, we keep saying you have to keep an open mind because things flip-flop so quickly and so easily in this environment, which is basically kind of an uncertain environment that we're dealing with. So if the economy slows down, for example, and the Fed decides they're going to take even more measures following perhaps the European example and drop interest rates in the U.S. to negative, which right now no one's expecting, but it's not out of the question, then that would be a different story altogether. So these are all things we're watching and just kind of taking it as it comes, so,
right.
So to speak.
Yeah, we have just a minute left. That could be insanely disruptive, couldn't it? Negative interest rates. I mean, we've never had that in the United States. Never.
In fact, it's interesting. Never in 5,000 years, as far back as history goes, on the global interest rate picture, have we ever had negative rates. So it's kind of like, that's why it's a kind of a wild time, because no one really knows what's going to be the end result.
Yeah, when I think of that, I think of the old cartoons where, the character, the Roadrunner or whatever is. It wouldn't be the Roadrunner, but maybe Tom and Jerry. They're trying to stop the leaks from the dike. And they're and just there's hundreds of them, and the negative interest rates is like this is our last ditch effort, and it seems.
Yeah, I mean that's a really pretty drastic effort, and like we say, we don't expect it, but we wouldn't rule it out of the question either.
And Janet Yellen has said that. She said that's a consideration that's not thrown out completely. So they're contemplating it themselves.
Wow, that's serious stuff. Mary Anne and Pamela Aden, the Aden sisters, they're the co-editors and publishers of the Aden Forecast. The website is Aden Forecast, ADEN Forecast.com. You can tweet them at the Aden Forecast. Mary Anne and Pamela, thank you for being with us today.
Well, thank you, Tom. It's always a pleasure.
It is a pleasure. Thank you very much.
Thank you. Great talking with you.
To watch more clips from our programs, hit the Watch More Videos button over here. And please be sure to hit the handy-dandy subscribe button so you'll always be up to date. Tag, you're it.